look at the markets in depth, understand from our chartists where they see this headed going ahead. We also have Hemant Shah who's joining us. Hemant Shah is a fund manager at Seven Island PMS, as well as along with him we have Kunal Bothra as well as Naresh Mirani joining us on the show. Good afternoon, gentlemen. And Kunal, let me come first to you. And let's talk about, in particular, what exactly is happening in the IT index. This one from among the top gainer on today's trading session has actually caved in, down about 1.5% from the day's highest point. What exactly is happening in that sector? Do you think that the top was already made for it on Friday when all of them were rallying post TCS's numbers?
Not really. I would believe that this is just mild profit booking because the IT index today opened with at a lifetime high for itself at 39,450 mark, which is the previous highs approximately. We managed to cross over those levels, and after this kind of a steep rally, I think, and especially the news flow for a couple of large cap IT names, it's bound to be that these stocks would get into a bout of consolidation. But I would believe that if these stocks dip back by another couple of percentage points, say on an average, I think that could probably trigger a very good contra entry point again for many of these IT names, because what you're seeing now is a structural change. And when a stock or an index, and we are talking of one of the more formidable indices for our markets, when that makes a fresh high after 3-4 years of consolidation correction, then I think we are looking at a major revival over here. So I think it depends now on one's outlook. Someone who's riding the rally over the last 3-4 weeks and is sitting on 20-25% profits on many large cap IT names, I think they could be ones which could probably try and book some profits out. But for someone who's looking out for a time frame of 6 months, 1 year plus, I think this could just be the start.
All right, this could just be a start is what Kunal is of the view, and just a mild bit of profit taking is what we are witnessing in the IT index. Naresh, let's talk about the PSU banking index then with you, but given the fact that a sharp gain, 3% up move, some of them also reacting to some numbers that have actually come in trade today. Where do you see this space? Do you think now it is a PSU bank index versus private bank once again?
So if you look at the recent moves which happened in recovery in a HDFC Bank or a Reliance or a Kotak Bank, we've not seen a similar recovery happen in the PSU Bank segment. So today is the first day we've started seeing a recovery, but yet we are not yet closer to an all-time high back on the PSU Bank index. So if you look at the PSU Bank index, we were at 8,000 plus levels on the exit poll day. We are still far away from that. Even the names which are the most talked about, a Kotak Bank, a Bank of Baroda, as well as a Punjab National Bank or a Canara Bank, they've all been away from the all-time high. So they still have a lot of catch-up to do. So if you look at a Canara Bank, the stock made a top around 128, 130 on exit poll day. We are still not there. So the view is there could be a catch-up trade in all the PSU banks. Even State Bank of India is still away from the highs made of around 900 plus. So I would expect all these names to slowly go and make a new high. So positive on PNB, CanBank, BOB and SBI.
Okay. Kunal, how real is this rally in PSU banks?
I think I'll probably wait for one more day, Nikunj, because in the last 1 month of this correction for PSU banks, there have been these kind of starts. But then what they lack is a strong follow through. The best part about the PSU banking rally today is SBI has managed to come out of a resistance. So I think that 870, 860 mark, where the stock was hanging around over the last 1 to 2 weeks, even though it was more relatively stronger as compared to the other mid-cap, large-cap peers from the banking pack. But I think that's made a comeback. So maybe the leadership is coming back to SBI. But ideally in this kind of a scenario, it's always best to wait out for one more day because then we could be looking at a 5% to 10% further swing upside for many of the PSU banking stocks. So I'm okay to let go of another couple of percentage points. But in the next 1 or 2 days, we should see a follow-through up move. Only then a buy should be initiated.
Every time we've seen Hemant Shah market that private banks are getting ready for a comeback, IT is getting ready for a comeback, that has run into resistance. For example, good move in IT on Friday, today no follow-up buying. Couple of days of good gains in HDFC Bank, no follow-up buying. Why is this happening? Why is the private end of the market, which is loved by institutional investors, is not coming back?
Hi, thank you for having me on the show, Nikunj. So basically the bump up what we saw for the IT was the results of the TCS and the commentary by them, basically. And the underperformance of the IT sector till yesterday. Now the gap of the underperformance is getting negated. So yesterday was the IT, today is the PSU banks. Basically, the triggers are the numbers, the results, and the guidance going forward by the management. And the US, as you rightly pointed out, is going to be the key role to determine the future of the IT sector. And it is widely owned. See, it is widely owned by institutions, right? So, since, as you rightly said, the follow up is not there because it is quite widely owned. And the event is of one result, and the trigger for the industry on the basis of just TCS results, I think is that it has taken the whole IT sector by a little bit surprise, and hence the euphoria of buying for a day. I think just a trading interest rather than any institutional interest as of today.
If you like this video, then like, share and subscribe to ET Now.